Okay, so here's an overview of all the types of credit issue that somebody may have. And we're just going to go quickly through these because this may apply to you and it may not apply to you. So for foreclosure, that's pretty simple. If you've given a house back to the lender, I want to dive into bankruptcy a little bit, and I'm just going to move this slide right along with it too. There are two chapters that we've seen a lot of borrowers with. Is the chapter 13, which is a repayment plan. And chapter 7 is where you pretty much start all over. General waiting time is for chapter 13 is 1 to 2 years, and chapter 7 is 2 to 4. If there's multiple bankruptcy, we definitely want to talk to you before you guys make that determination. Peggy, judgment.
A judgment is where someone has taken you to court over a bill. So you didn't pay your landlord and your landlord took you to court and the judge rules in favor of the landlord. Then they place a lien against you at the courthouse level, and that's actually what we call a judgment. So that has to be paid out in full prior to us closing on a loan.
That's right. Mm-hmm. That is really important, and if you don't tell us and we don't know that up front when we do the pre-approval, we will always find out during underwriting.
The background check.
Yep.
Totally.
Trish, collection and charge off that we see a lot. What are some type of collection that we see a lot that
oh my gosh,
we have to deal with?
You guys, we get a lot of medical collections. You know, what happens a lot of times is, you know, if you are just, 30 days late or something like that on your, 30 or 60 days late on paying that medical bill, they will put that right into collections. So what that means is they have sold that to a collections company and it gets reported on your credit report now, and now you can't go back to the medical facility and try and pay that off. You've got to pay it directly with the collection facility. And it happens actually pretty quickly. What would you say, Peggy, 30, 60 days?
It's like 30 days and they're sending it into collections. And
yeah.
General rule of thumb. And the problem is they send every single visit into collections separately. So it can just decimate somebody's credit.
Yeah.
So you've got to be careful with that.
Now, charge off, that's on credit cards that you're not able to pay off, and the company doesn't want to come after you anymore, and they know that they can't collect it, so they're going to just charge it off. We will go into dispute in a couple of slides later.
And one thing on charge-offs is, like, if you have a car loan that you, let's say, is repossessed, so you've given that car back to the lender, what happens there is you've signed the note for, let's say, $10,000 that you borrowed, and they took the car as collateral. When they sell that car, let's say they only get $6,000, and you technically still owe them that $4,000, and they will throw that out on your credit bureau, so they don't come after you potentially any longer, but they'll throw it out on the credit bureau, so when you come into us, that's when you find out about it.
That's right.
So just an FYI there.
Very important, because we do see that a lot, and especially on also lease card too, that there's balance that needs to be paid off.
Right.
Late payment and overdraft. Why is late payment so important to consumer to know that lender will see this?
Late payments are the every time that you are late, 30 days or more late on a creditor. So anything like that, like we said earlier, that's definitely reported. Overdrafts, if you're overdrafting your checking account, in other words, you're spending more than what you have in the account every month and multiple times, that can affect your the loan process as well. People don't realize that.
Right.
The other thing though, if you've got like your savings account attached to your checking account and the bank moves it every time a check overdrafts it, that doesn't hurt you as much. But if it's a true overdraft and you're getting charged every month and you're running in the negative, that can be a negative because that's how you're handling your money.
That's right.
Okay, so We know life happens, you guys, and there are big life events that happens that may cause, a credit issue.
Absolutely.
Bottom line, with those credit issue, we want you to meet with a lender like us before you make that determination whether you can buy a house or not.
Yeah, a lot of people just think that they can't. And, sometimes it's just telling your story.
That's
That we
right.
have to get your story, and we might have to write up some letters of explanation, and we might have to get some documentation to document what happened in your life.
That's right.
So life happens to, things can happen to good people. That doesn't mean that, you're necessarily bad and
Right.
that you're a bad
Mhm.
risk.
But there's a little caveat there. I do want to explain just really quick extenuating circumstances. Extenuating circumstances are catastrophic events. It's not when you quit a job or something like that.
Or
It's-
divorce.
Or a divorce.
Mhm.
Those are terrible events, but they're not catastrophic. We're referring to, you've had a major illness and it took you down for a long time. Those are things that we can really take into consideration. So just don't be discouraged if you have those things that have happened and now you're looking to buy a home. We can help you with that too.
If you have any questions, feel free to reach out to Trish at 920-457-5626 or email her at trish.toutloff@cibmmortgage.com.